My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to save you a little money. My job is not just to entertain, but explain days like today. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. People have it all wrong. On Wall Street, we celebrate Halloween by saying trick and then treat. The trick is what happens when great companies report their earnings. The treat is the payoff for sticking with their stocks, even when everyone else panics, because there's some part of their earnings statement that doesn't please a small group of hedge funds who take action on anything, even things that don't matter. I know markets can be opaque, especially on sessions like this, the last day of what should have been a turbulent month, right? Dow lost 378 points. S&P plunged 1.86%. NASDAQ plummeted 2.76%. For example, some money managers are dumbfounded when a very good company reports a very good quarter, but then issues a very conservative forecast. They take the forecast as gospel. They believe that management's truly worried about the future, so they get scared. The trick. And then they sell. And they miss sell the tree.
That was easy.
It's almost as if they believe that the candied apples we used to get when we were younger, they were given by the Tuckers in my neighborhood. Can't miss that house. Will turn out to have razor blades in them. It's insane how frightened shareholders can get. Yeah, by the way, you can see the footsteps of those who lack fortitude simply by examining the charts. They're the ones that cause the dips. And those dips give you a chance to buy high-quality stocks at a discount. And that's a chance you can't afford to miss in this market. Yeah, on days like today. Hey, did you hear anyone else say that? I mean, did you hear everyone say let the sellers have their way today, but you can start buying tomorrow? I mean, it's kind of my mantra. Let's go over some pertinent examples so you know what the heck I'm talking about. Microsoft. Last night they reported and the earnings looked terrific as usual. The stock immediately started popping in after-hours trading, even as I warned you not to touch it until we heard from Amy Hood, the implacable CFO who became the keeper of the forecast more than 10 years ago. Microsoft has a calibrated reporting game plan. They start the call later than almost every other company, 5 p.m. Then in the heart of the call, Amy tells you the numbers, and then she gives you the forecast. More than 10 years she's done this, probably 40 calls. You never know what the future holds until you listen to what Amy says about the forecast. Yet people are always eager to trade off of something, somewhere, any meaningless initial headlines rather than waiting to hear the full story. And that's just what they did. Last night, Amy talked about how one of Microsoft's key divisions, their Azure cloud infrastructure business, had so much demand that they couldn't meet all of it, meaning Azure couldn't make as much money as they would have liked. That led to a bit of a guide down the current quarter, although Amy says the company will make up the difference and then some in the back half of their fiscal year, meaning the first half of calendar 2025. And, of course, that sent the stock down, and all those people who bought it up look like idiots, and they are. They're what I call jamokes. This quarter's sales could be a $1.3 billion light. Not great. But given that this is a $68 billion business, you mind I'm not sweating the program? Here's why. For as long as I've known Amy Hood, and that's probably about 3 decades, she's been conservative in giving outlooks. That's her nature. It's a big reason why she's so great at her job. She never overpromises, and she's more than likely to over-deliver on her projections. If you look at her body of work, that's what she has done over and over and over again. Incredible track record. But traders don't look at a body of work, for heaven's sake. They don't know Amy from Adam. Drives me crazy. So, of course, the stock, which is only up 8% for the year, now gets clobbered. It fell 6% today. In fairness, that move makes sense if you don't know Amy Hood, who's one of the most exacting CFOs I've ever met. If you do know her, though, this pullback is ridiculous, facetious, fatuous, and lacking in any sort of rigor. Yep, this sell-off, ladies and gents, is a classic example of missing the forest for the trees. The Azure guide down is a tree, maybe a stunted birch tree, maybe even one of them weeping weed trees like the weeping willow in a forest of greatness. And Microsoft is king of the forest. Microsoft's greatness comes from its execution of its grand strategy to dominate the enterprise's use of artificial intelligence. So far, that strategy has been a stunning success. I should add that nearly 70% of the Fortune 500 uses Microsoft 365 Copilot. That's the farce. There was a lot of woe is me about how much Microsoft's spending to come up with an alleged forecast shortfall. False narrative. True narrative. In a time when both the Justice Department and the FTC are gunning for any dominant tech company, even if that dominance comes at a tremendous cost with the potential for utter failure, Microsoft simply can't say what it's trying to accomplish straight out. I can do it for them. They will have total dominance of AI in the enterprise market, a remarkable feat, and they did it in only about a year's time. You may want to say that's not worth anything and lock in some gains. I say, yeah, fine. I always taking profits, good thing. But I say let it ride. That's what we're doing for the Charitable Trust. You should do it. Fortunately, they spent a lot of money to stay dominant. I don't mind that either. How about Meta? Another one that got clubbed today. I mean, just crushed, 4% down. Here's a company that has 3.2 billion daily users, and that's a lot of the planet, isn't it? Can you imagine the advertising program they can work with, this kind of user base, the targeting, the precision, the return on investment? I think everyone's underestimating their ability to dominate the digital advertising market. Meta's seeing rapid adoption of its AI wares, including I like them, the AI-filled Ray-Bans. Most important, 500 million people use Meta's AI platform. And Mark Zuckerberg says it will be the largest of the generative AI platforms by year-end. Meta AI is spectacular. If you haven't used it, it's smart. It's funny. It can devour video. By the way, that's a clear sign that NVIDIA's Jensen Huang's at work here, because NVIDIA's most recent advanced AI chips excel in processing video. Again, in an era where the government wants to stamp out corporate dominance, even if that comes at the expense of our amusement and our intelligence, Zuckerberg can't simply crow that we own the consumer. Don't come near us because we will outspend you. All that does is give you a one-way ticket to the Justice Department for a beating by the figurative rubber hose of antitrust. Dominance. Dominance, whether it be in the enterprise or the consumer, costs a lot, but it's good to be the king. Hey, speaking of internet royalty, Amazon reported a strong quarter after the close, sizable revenue beat paired with a monster earnings beat, even though the revenue forecast for the current quarter fell short of expectations. I'm sure someone will freak out about that. Their operating income guidance was excellent because they've been very disciplined about controlling expenses, so the stock caught fire in after hours trading. Again, Amazon is spending like mad. Why? Because they want to dominate retail, whether it be Prime with advertising. Along with that dominance, of course, comes with the most lucrative cloud business. As for Apple, there's been so much doom and gloom. Wow. I mean, really. We were told so many times that the iPhone 16 was dead on arrival. We knew there'd be a guide down, and they gave us a guide down. Even as I say, own it, don't trade it, I recognize that the consensus going in for the next quarter, 6.8% growth, was not going to be met. I told you this repeatedly. Repeatedly, I told you that. It was way too high. I told you that. I said the stock would go down. I told you that. Apple's looking for low to mid-single-digit growth now. It's exactly as I said. But to me, Apple's a changing story. It's going to be less about the release of iPhone and more about the software. I think that word of mouth on each new phone each new piece of Apple Intelligence software, each new update will spur growth. I am glad the guy down is now out of the way so we can actually concentrate on what a terrific company Apple really is. Oh, by the way, that matters too. Who would have thought it? Here's the bottom line. Don't let the action trick you into selling stocks of great companies that, when you do the homework, are actually doing very well. These are the dominant companies. Ultimately, you sell them at your own peril. Brian in Maryland. Brian.
Admiral, permission to come aboard stock ship Cray America.
Oh, man, welcome aboard, Chief. What's happening?
Well, I have a stock. I confess I've traded in and out of this stock in the past to good effect.
Okay.
About 1 year ago, there was a relatively big pullback, and I bought some shares intending to hold them. Within a few months, they were up about over 40%, but recently they've given back about half of that gain. Jim, this is a company you have mentioned several times on air, but do not hold in the trust portfolio. Should I continue to hold or revert to treating this as a trade? It's McKesson, MCK.
McKesson's, look, what can I tell you? They're a middleman. Now, they'll tell you that they have expertise, blah, blah, blah. I will tell you this. Boy, they coin money. I mean, McKesson, you sell McKesson. I mean, the stock's been going down. So remember, it is an election year. People don't like these companies. As soon as the election, what is that, over? It's like next week or something. I'm like here for like 4 days. I have a cot. I don't care. But you know what? After the election, that stock's going to go up. Let's go to Trey in Texas. Trey!
Jim, as you know, I've liked Wingstop for a long time, but I recently had to part ways with my shares. No matter how delicious the Bayou barbecue is, it's difficult to justify chicken wings at 120 times. Therefore, I've taken my capital and my appetite over to Chili's. And, Jim, I think I speak on behalf of all my fellow baby-back bulls when I say we love having legendary CEO Kevin Hochman at the helm of Brinker International. What a rally. Will it continue?
There were 2 downgrades today, and at one point the stock was up $3. I mean, these downgraders, they don't know what they're talking about when it comes to Brinker. I've been thinking a lot about Wingstop, and I've got to tell you, here's my problem. I follow about 1,000 companies. Actually, I follow about 4,000 companies because I don't sleep well. It's been a problem all my life. And one of the things that I found does matter. And look, this may just be, it could be something, a quirk in my brain, but I care about earnings per share, and their earnings per share were awful. There's nothing I can do about it. I want not to think about it. I go to bed and I think about earnings per share. And that's my problem, not theirs, because they don't worry about it. Lucky them. Let's go to Mark in Pennsylvania. Mark.
Big booyah to you, Jim Cramer. Happy Halloween.
Oh, man, I'm playing myself.
Long time listener.
I'm going as myself. There's a really good Twitter or X or whatever he calls himself, the richest man in the world, about me putting on a little makeup in the show. If anyone want to watch, that's a good tweet. Thank you, Dylan. Thank you, Heather. Heather, 2 shout-outs in one day. What's going on?
I got a question for you about CCJ. Before they announce earnings, I'm curious if it's a good time to buy.
Oh, well, look, I talk about this a lot with Ben Stoto. You know what? I'm just going to give in. If it has to do with uranium, I give up. Buy. Just go buy it. I don't care anymore. And Wingstop, I'm sorry I went off on you. I like your wings. I just thought that the EPS thing should have mattered more to you, because it sure as heck mattered to me. Remember, it's not trick or treat on Wall Street. It's the trick and then the treat. The trick is when the stock sinks after earnings because people don't know what to do, but they're hedge fund guys. They make for a living not knowing what they're doing. That's fine. I did it myself. But the treat comes when you stick with it after everyone else has panicked. Then you pick it up and buy. Okay? I know who Wingstop is. They're Sam Gerard. They're from The Fugitive. Yeah. Earnings per share? I don't care. I'm Mad Money tonight. Industrial gas company Linde crossed the tape today with an earnings beat, but has lowered guidance and cause for concern if it has earnings per share. I've got an exclusive with this longtime club name. Then the maker Sensodyne and Flonase missed Wall Street's mark a little bit, but you know what? What a winner it's been. Let's check back with the CEO. Plus, Clorox top brass is joining me. I cannot believe they could come back after that hack, but they came back stronger than ever. So stay with
House of Pleasure.
Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
This morning, we got results from Linde. It's a major industrial gas play that we own for our travel trust, have done for ages. We've owned it because it's such a consistent operator. Sure enough, this time the company reported right down the middle of the fairway quarter with small top and bottom line beats, as well as excellent growth in its backlog. It's now at over $10 billion. Unfortunately, Linde also gave us okay guidance for the current quarter and trimmed its full-year outlook, which is why the stock went down 3.6%. So what do we do with this one? Look, at the end of the day, Linde is a bit of a cyclical company. And right now they're forecasting that the economy won't improve that much in the near term. But think about this. If the Federal Reserve hits the gas, rates come down around the world, okay? This company is a worldwide company. Then it will do a heck of a lot better. So let's take a closer look with Sanjeev Lamba. He's the CEO of Linde to get some more context on the numbers and where his company's headed. Mr. Lamba, welcome back to Mad Money.
Thank you, Jim. Pleasure to be back.
Okay, so Sanjay, when I talk about your company, I talk about it quite a bit because we've owned a big position for our travel trust. People always say, Jim, what is an industrial gas? I mean, what's the deal? Aren't all these things the same? Now, we happen to have Jim Fitterling. I talked to him a lot for Dow. He's involved with a project in Canada with you. Maybe if you explain that to people, they'll understand what an industrial gas company can do.
That's a brilliant way to start, Jim. So let me just start off by saying the headline over here is we've got a backlog of $10 billion. A backlog is where we've got a contracted project with guaranteed returns that are going to happen in the next 3 to 4 years and ramp up. Why do I say the backlog of $10 billion? Because $2+ billion out of that is for the project with Dow in Fort Saskatchewan. This is a big facility that we're going to put up. Jim is doing a really tremendous job of decarbonization. They're looking at reducing scope 1 and 2 emissions at their Alberta complex because we're going to supply them the low carbon hydrogen or blue hydrogen for that complex. So what we do in industrial gases is build a plant, manufacture, in this case, hydrogen, capture the CO2 to make sure it is clean hydrogen. We call it low carbon hydrogen, and supply it to their crackers to make sure their emissions come down. That's one example. Obviously, there are many other areas where we provide gases as well.
But what's important is I know that you and your predecessor told me, Steve Angel, that you would never do a project with hydrogen unless you made money, that they are not dreamers at Linde, they're practical people.
I'm so glad you said that, Jim, because for us, there are a few things that need to happen for us to do a project. Now, look, $2+ billion, that's a big investment. So we need to make sure we have a good counterparty. Dow is an exceptionally good counterparty. Obviously, Canada and Alberta in particular, a great region to invest. But most importantly, we need an offtake agreement from Dow and other customers to make sure that we underwrite the big investment we make. That's how we make money. And that was a point I think Steve Angel would have said to you.
Yes, I think he definitely would. Now, I do want to talk about the quarter. The quarter was good, but the guidance failed to wow. And what I told people, Jeff Marks and I, because we send bulletins out, we said we've seen this movie before. This company can triumph in any environment, but if interest rates do come down, then you're going to triumph no matter what.
So I'll say two things over here.
Okay.
One, we are very resilient, Jim.
Yes.
And you've seen this over and over again. You've seen this movie before. So the essence over here is we are seeing potentially an economic contraction. Industrial activity is down, industrial demand is down, and we're reflecting that in our guidance. Now, we are conservative, as you know well, so I think that's reflected in our guidance for Q4. Our view is with a bit of economic contraction, we will actually hit the range we've given, which means we get to about 10+% EPS growth for the full year with FX excluded. Now, with a little bit of tailwind, and the example I typically give to illustrate this point, Jim, is 2021. We had the recovery from COVID. We were up about 6-7% volume, EPS growth 30%. Now, a little bit of tailwind from industrials, a little bit of tailwind from economic activity generally, you will see a multiplier effect on our stock, and that's who we are.
People have to understand you're an international company. For instance, when I say international, like I will look to Korea for you. I'll look to China, but I want to know what you're doing in Canada. I mean, this is not an American company that does business overseas.
Well, the U.S. is a very important market for us, Jim, as you would expect. About 40% of our sales come out of the U.S. or the Americas in particular, North America. But we are in 80 countries. And one of the benefits we have is that, coverage of geographies gives us the risk diversification to look for. That, hence the resilience.
Right.
The other thing that helps the resilience is the fact that our contracts are structured in a way that we pass the risk on to our customers to a large extent. Whether it's feedstock and energy cost changes, we call them pass-through, or indeed, we have minimum take-off pay or a monthly facility fee which guarantees cash flows when we make these investments come through. So geography, diversified end markets, and a good contractual structure, that's the magic.
And one of the things that people have to understand, we did cover the cyclical part, but healthcare is giant for you, and all that does is go like this.
We expect low to mid-single-digit growth in healthcare consistently, and it is, as you said, the demographics work for us. Obviously, the healthcare offerings we have are tuned to respiratory, as you would expect. Right. We are a gas company, after all. So we try and manage that, and I think we have more than 2 million customers worldwide that we serve at home. And we have a number of hospitals worldwide that we serve as well. So again, the resiliency coming through what is a very steady growth market for us.
Now, I also want people to understand that there is a beverage component. I mean, because honestly, every time I recommend your stock all the time, wherever I say, why not buy Linde? They say, well, what are you talking about beverage? I said, well, it's not just carbonated soda. It's bigger than that.
Correct. So food's a big, it's a big market for us. Right. It's a very resilient market as well because everyone is looking for growth in food. Yeah. People want convenience, they want different flavors, and obviously they want a good drink. So between all of those, we play in every aspect of that. CO2, every time you grab a beer, obviously it's carbonated. Right. It's hopefully our CO2, which makes it better. If you have a Pepsi or a Coke, we're agnostic to either, but obviously the CO2 that we provide is to both of them. In addition to carbonated beverages, including for a lot of wine, as you know, we provide modified atmosphere packaging, which essentially means that we're able to hold on to the shelf life of those products for a longer period of time. That's another play. And of course, sitting in all of that is numerous new freezing and chilling applications we do. Between McDonald's, we chill 2 billion pizzas a year. I mean, that's a big number. So all of that is where food and beverage really is for us.
And then just to go back to full circle on the environment, there are many companies that need you and can't really companies that we would maybe be critical of that are turning to you really for advice about how to be decarbonized, correct? Isn't that a major part of your business?
Absolutely. Jim, in fact, you've said in the past as well that we are a big player in decarbonization, and that's true for two reasons. One, we have the products that help decarbonize. Two, We have the expertise that helps companies help decarbonize, right? It could be a small glass player. These are small players, but they're looking to reduce emissions in their furnace. We can do oxy-fuel, which actually helps reduce furnace, or indeed, we can do carbon capture sequestration if it's a large furnace in a steel company. Or, of course, we can give blue hydrogen or low-carbon hydrogen and reduce emissions at the input stage. All of those factors come into play when we're advising people on decarbonizing.
Well, great expertise, great plans. I'm glad we started with Dow and what you're doing, because that is the future. And if we don't do that, we all know what happens to the environment.
Absolutely.
Left, right, you should feel that way. That's the way I think. Anyway, that is Sanjeev Lamba, CEO of Linde. Please read our note. The note on Linde is just like all the rest of them. We tell you to buy it. Mad Money's back after the break.
Coming up, Haleon's brands might be in your medicine cabinet, but should the stock hold a place in your portfolio? Cramer sits down with the CEO after earnings. Next. Tomorrow, kick off the trading day with Squawk on the Street. Live from Post 9 at the NYSE.
Maybe you and I are due for a drink?
Yeah, several.
Why not? We'll have some mezcal. My wife will bring it. And the next thing you know, we don't know who will work for it, but it's going to work out no matter what.
It all starts at 9 a.m. Eastern.
A little over 2 years ago, GlaxoSmithKline spun off its consumer healthcare division, separate company. It's called Haleon. Even though this business has a lot of shelf space in the drugstore, Advil, Centrum, Emergency, we loved it. Sensodyne, addicted, Theraflu, took it too soon, Flonase, too soon, don't worry, I'm not sick. The stock stalled out near the end of 2022 and then did nothing until this summer. Wow, lately, though, it seems to be finding its footing. It's roared higher for the past few months. Right, earlier today, the company reported a quarter that can only describe as good, but maybe not good enough. So how do we judge this quarter? Is this was just a case where the expectations got ahead of themselves? Maybe there's a currency issue? Should we be concerned? Let's check in with Brian McNamara, the CEO of Haleon, to get a better sense of what's happening here. Mr. McNamara, welcome back to Mad Money.
Jim, great to be here.
Well, last time I saw you, the stock was just kind of ho-hum. You told us, look, this is about to roll. It's about to go there. What were the leaders that made it so that people who watched the show when you were on last made so much money?
Yeah, I think a few things, Jim. If we're 2 years in, as you said, I think we've consistently delivered above-market organic sales growth, underpinned by the categories we're in, and obviously the brand portfolio, which you mentioned, Sensodyne, Tums, Advil. These are brands loved by consumers and in homes everywhere. When we listed, we had a couple challenges. One was we were quite high levered. We were 4 times leverage. Right. We got that down below 3 by this summer. And while doing that, we returned about £1.5 billion to shareholders in stock buybacks and dividends. The second was we had a big overhang with 45% of our ownership in GSK and Pfizer. Right. GSK is completely out. Pfizer's down to 15%. And as that happened, we saw a real shift in our shareholder base going to more long-term consumer staple shareholders. So, I think it's the consistent track record of delivery and some of those overhangs that are now gone has really helped unlock the value of the stock.
Now, on the quarter just reported, I saw something that I've not seen in a long time, which is a concern to try to back out a pound versus a dollar. I think it created some mystery. Let's call it mystery because people just aren't used to seeing anything other than dollar weak, dollar strong. Yeah. So it is a little convoluted, and I think it may have hurt the perception of how you really did this quarter.
Yeah, and if you step back on sales growth, organic sales growth, 6.1%. 3.3% pricing, 2.8% volume. So volume growth like that is really important in this particular market, and we're seeing resilience in our categories. Our organic operating margin, was 23%, up 30 basis points organically, but we had a headwind of 120 basis points, and it was due to the pound strengthening to the dollar and other currencies. So, it's hard to manage to FX, and you right. can't. So the underlying business is really strong, but we did see a currency headwind. And, we've given guidance on the full year of what that currency headwind is going to be, and we expect it to be in line with the guidance.
Excellent, because I hate that stuff to get in the way of people buying a company that makes brands they love. Now, I don't have anyone in the whole panoply of companies I follow that is doing well in China except for you. How is that possible?
Yeah, so our China business is fantastic. And in the quarter, you probably saw we had double-digit growth.
I don't know how you did it.
Yeah, and the thing about China is we're in great categories that matter to consumers. We have a great brand portfolio. So we have brands like Fenbid, which is the Advil of China, and Contact. We have an oral health business and a very big vitamin mineral supplement business. So, we're seeing strong demand, strong growth in China. We're quite optimistic about the future there.
Wow, that is terrific. Now, I know you actually got bigger in China, right? You've changed your structure, and it seems very positive for shareholders.
Yeah, so we bought out we're in the process of buying out our JV partner in China. On November 22nd, that deal will close, and we'll own 88% with the option to buy the additional 12. That's EPS accretive for our business. We've been running that business, but we've had a JV partner for 30 some odd years, and now it's just the time for us to take complete control of the business.
All right, that's great. Now, one of the things that I was out with a major consumer products company. I'd like to go out with them a lot. I hope we get together because there's a lot to learn when you're off the desk, so to speak. And they indicated somewhat a bit of a jealousy in that there are products you take, not drugs, products you take that are heavily recommended by doctors, not FDA. You're not doing any of that, but my dentist recommends this. My ENT recommends this. My my physician recommends this. Now, these are, and of course, unfortunately, I take too many of those, everyone in the office knows. But you happen to have the brands that are unique in that they're close enough that they get recommended by doctors. But it's all organic, correct? It's just 100% organic.
Yeah, some of that is organic. Some of that is actually us. So if you think about Sensodyne, and this is Sensodyne Clinical White. And what's interesting, Jen, if you look at the toothpaste category the last few years, whitening has been a huge growth driver. But whitening toothpaste in general are harsh on enamel and
yes, I know.
Not good for sensitivity. So we developed a product that will clinically proven to whiten your teeth by 2 shades and still give you sensitivity protection as Sensodyne. The dental recommendation on that is huge, and that's actually part of our model. We do detail dentists all over the world to get that recommendation. And a lot of the other stuff you're talking about is organic. It's doctors probably use the products on their own, and they recommend them to their
well, I will switch.
Patients.
I told you before we started filming that I'm Sensodyne. I did not have this. I had the problem. I have the enamel bill one that you gave, and my dentist gives me a good bill of health. The last thing I saw was that you are heavy in the NFL. I wanted to know whether NFL also Amazon or NFL just on the big national games, but that hasn't been good for you.
Yeah, we advertise on the NFL, and we have a new product launch we just advertised recently there. So, yeah, listen, a lot of our targeted audience is watching NFL games. So, we want to be where our audience is and be able to make sure they understand the benefits of the products we offer.
Well, look, I've got to tell you, I love it when I see a guest who comes in with the household brands that don't have high risk, but because you're doing above average numbers, good numbers in China, and are a good steward of the brands, you make money for people. I want to thank Brian McNamara, he's the CEO of Haleon. Thank you so much, sir, for coming on.
Thank you, Jim. Great to talk to you.
Anybody back in a moment.
Coming up, Clorox can help clean up your Halloween messes. Can it help your portfolio clean up on the street? Stick with Cramer.
Last year's string of cyber attacks disrupted businesses all over America, including Clorox, the iconic consumer packaged goods play. Stocks sold off hard. The hack actually disrupted the availability of their products, one point sinking below $115 last November. You know what? That turned out to be a great buying opportunity. Stock has rebounded to 156 at yesterday's close, and then Clorox tacked on another couple bucks today after the company reported a spectacular quarter last night. They delivered substantial revenue beat, 31% organic growth, although some of that's because, of course, they were up against easy comparisons. Still didn't matter. This was a good quarter. Gross margin expanded by 740 basis points. Clorox earned $1.86 per share. Wall Street's only looking for $1.39. Raised their full-year earnings forecast in response to gain. Stock gained 1.3%. The only thing probably keeping a lid on Clorox is the old hedge fund playbook, which says stocks like this one rarely win when the Fed's cutting rates. But with bond yields steadily on the rise here, hey, maybe we need to forget the playbook for a little bit. Let's just dig in deeper with Linda Rendell, the chair and CEO of Clorox. Learn more. Ms. Rendell, welcome back to Mad Money.
Great to be here, Jim. Thanks for having me.
Linda, first of all, congratulations. I mean, it was just an incredibly strong quarter. And what people need to realize, as you say in your call, is that not only did you get things back from pre-cyber levels, but you saw growth in almost every one of your categories. And that it's important to note that the growth came before we began lapping the cyber disruption. That's what I care about. How were you able to turn the jets on all these brands, particularly after some of them really were held in abeyance because of the hack?
It's a great point, Jim. We had strong momentum heading into the fiscal year, despite the fact that we had an easy comp due to being out of stock last year. We entered this fiscal year with strong operational momentum. We had fully restored distribution. We had fully restored supply and most of our market share. And the great news is this quarter, we continued that progress and got back to our overall market share levels that we were pre-cyber. And this is due to the fact that we're investing in our brands through advertising and sales promotion and ensuring that we have a great innovation plan.
Well, I think it's important to point out, I mean, you came on immediately in the hack. You never hid, you never ducked. But I had no idea how bad it really was. When you stop and you're on Amazon, for instance, they turn on you. I mean, the Fresh Step situation, what a disruption. Just tell about it. Let's use that one as an example of how bad this really was.
Yeah, Jim, we were operating in a manual mode for nearly 2 months. And we had to have each one of our customers, who we're incredibly grateful for, create separate individual manual processes in order for us to get them product. So we lost about a third of our distribution and market share during that time, and we had to rebuild that. Now, given the strength of our brands, they offer superior value, and the fact that we were laser focused on getting our fundamentals in place, we rebounded. Cat litter is a great example of that. The job's not done. We've nearly recovered all of the share that we've lost, but we have more work to do in that category.
You were still able to introduce some exciting new products, Scentiva Lavender, Jasmine Bleach, plant-based Clorox Eco Cleaning Disinfectant Wipes, which is so important because people really feel like these things they never dissolve, and that's not true. How are you able to introduce these at the same time when you're 2 months off because of the cyber attack?
Yeah, one of the first things that we did as a team is we divided and conquered during that time. We focused the people who needed to recover our distribution and our operations on one side, and then we walled off a group of resources to focus on innovation with the mandate that we would launch innovation coming into the back half and in fiscal year 25, and we were able to do that. And last year, we launched innovation on every one of our major brands.
How are you the top-selling brand on Prime Day for consumable items with Glad Trash Bag? How did that happen?
It's a darn good trash bag, Jim.
We use them, I know.
But also, we focus on the fundamentals. We've been partnering with Amazon and the e-com channel for a long time, so we have strong capabilities in that space. And that's a great example of a category consumers want ease for, and they love to have it on subscription. They love to have it delivered, and Glad's a great example of where e-commerce can work extremely well for our business.
Okay, no, there are each product had its own issues. Burt's Bees was hurt by the hack pretty badly. How did you that's a cult brand. How were you able to reignite the cult?
Yeah, for Burt's Bees in particular, that we have a very strong holiday business for Burt's Bees. Unfortunately, the cyber attack happened in August, which impacted our ability to deliver holiday. So just like we did for every brand, we focused on getting distribution back. We focused on ensuring that we had the right marketing plans, new innovation in that business, and then we're getting ready for a very strong holiday season coming up here in a couple months.
Now, what is the discussion like, without naming any particular retailers, including one giant one online, when you tell them, look, I don't know when we're going to be able to deliver product? I mean, why don't the dynamics just say, well, look, then get out? We've got another company that has product that's equal to yours?
When you have leading number 1 and 2 share brands, you're in a really strong position. And I could not be more grateful for each and every one of our retailers. I can't say enough about what they did to support us during that time. They went out of their way to build manual processes because our brands matter to their shoppers. And I think our partnerships are stronger than ever coming out of this.
Okay, now you had to bite the bullet on vitamins. Tell me what that was like, because you spent almost, your company, not you, your company spent almost $1 billion on this. Sometimes it's hard to come in and take the hit, but you did it. You felt like you had to?
Jim, we're focused on being a stronger, more resilient company that delivers good, profitable growth over time. And vitamins, minerals, and supplements just was not delivering on the growth that we had expected it to. So we looked at our portfolio and said this was the right decision, along with selling our business in Argentina. It was a similar decision. And this is going to be accretive from both a sales and margin perspective going forward. It was the right thing to do for our shareholders, right thing to do for the company.
When Procter got rid of Argentina, of course, it was a bad hit. And then ever since then, not only did no one ever think about it, but the numbers materially changed to the positive. I mean, I know it's not as big for you as it was for the Mosaic as it was for Procter, but it's going to be good going forward.
It's very positive. We're happy that we were able to get that done, and we think both businesses are with the right owners.
You are in a game of inches against other companies. And yes, you're number 1 or number 2. But is there ever any way to leapfrog, just say, listen, we're going to come in and make it so that we're number 1 in a category by buying someone? I mean, a private company can do it. I saw Mars buy Kellanova, and they can do it. They're not worried about levering up. But is there something out there that would just make it so, boom, you're number 1? Or could you make Burt's number 1?
I think first and foremost, our core is always the most important thing that we do. We need to ensure that we're investing in our brands. We're giving consumers superior experiences based on great innovation. And those in itself can be leapfrogs if you get the consumer insight right. But also there's opportunities for us out there. It's starting to see the deal market heat up a bit. And we are looking for that next growth opportunity that could either be focused on the core or could take us beyond in a category we feel has great trends.
Well, look, that's a good way to leave things. And again, congratulations. I didn't know what sheer hell it must have been. Holy cow, I thought it was bad. I had no idea that. Did you ever leave the office? I mean, were you at the office for just weeks with a cot in your office? You were, weren't you?
We were pretty much working 24/7, Jim.
Well,
so it's nice to get a couple hours of sleep now.
Well, you came out the other side real good. That's Linda Rendell, Chair and CEO of Clorox, who is a real trooper. Great to see you. Thank you.
Great to see you.
Everybody's back here for
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill. Booyah, booyah, booyah.
Thanks for taking my call.
It strikes every day. Cramer is back in a flash with your questions. Next.
It is time! It's over the light. Now clear that for what's going on. Saying this about by social media over here. Stop it. Play this out. And then the lightning round is over. Are you ready? Steve, time for the lightning round. Let's start with George in Arizona. George.
Big old boogie woogie booyah, Jim from the Valley of the Chips out here in Arizona.
Give that man a 3-year extension. How can I help?
I'm looking at a stock that reminds me of you. Ultra Clean Technologies, UCTT.
I shower in the morning and at night. I mean, I don't know what that has to do with it. But no, here's the problem with that, okay? The semiconductor stocks are so hated that I have to urge you to buy a regular semiconductor right now because they are being put for sale like you wouldn't believe. But go buy Broadcom. Go buy Broadcom, ABGO, and you'll like it more than Ultra. I'll tell you, really would. Old Space, just like my grandfather, right after, okay? Let's go to Tom in New York. Tom!
Jim, happy Halloween. Booyah.
Same right back to you. Whoa, very good. Booyah. Oh, award.
Okay. Jim, my question for you tonight, considering the current situation at Boeing and the idea that I don't think that they will have any new planes coming out in any numbers and any time soon, should that not benefit GE Aerospace?
Totally. Yes, you're absolutely right, because it is an aftermarket repair and you have horse sense, my friend. It's exactly what makes you have to have planes last longer, and that means more GE business. And anyway, you got Larry Culp there. Anyway, I'm going to give you a twofer. Let me just throw in GE Vernova, which is on fire, doing a fantastic job. I like it for. You know what? How about a threefer? GE Healthcare. All three are good. 3 GEs. Okay, that's Happy Halloween. Let's go to Matt in Washington. Matt.
Booyah, Jim. It's an honor to talk with you.
All right, same. Right back at you. What's up?
I recently retired after 30 years with the best medical device company in the world, Stryker. S-Y-K.
Oh, they are really, no, they're really good. You're right. Stryker's a really good company. I have been recommending Stryker a very long time. It's just one of those companies that you just want to own it. I hate to say this and forget about it because that's how good it is. Congratulations on a long career there. Let's go to Jay in Nevada, please. Jay.
Boo-hoo-ya, Jimbo.
Oh, yeah. What's up?
Wages, Nevada. Man, is that appropriate this week? Hey, first time, long time, club member, blah, blah, blah. I was looking for some mid-cap exposure, and this company was a large position in several ETFs I looked at. What are your thoughts on Lantheus Holdings?
It's very good. Very, very good. Great. I like medical imaging. I just mentioned GE Healthcare, same thing. It's a great place to be, particularly with all the things that are being done with AI. I'm going to throw in another. I like Medtronic. I like Jeff. I think he's doing a terrific job. Let's go to Sam in Massachusetts. Sam!
Jim, I may be calling in from Massachusetts today, but here's a company that I discovered in my hometown of Bryn Mawr. That is Essential Utilities, the ticker WTRG.
I know it well. It's a great company. I used to recommend it literally in the 80s and 90s when it had a different name. That is a terrific stock in Bryn Mawr. My mom used to say, one day, Jimmy, maybe you'll live in Bryn Mawr. And my father said, no way. Okay, let's go to Bill in Massachusetts. Bill.
Hey, Jimbo, I was thinking about initiating a position in Kava. It seems to have pulled back 5%. What do you think, my friend?
I think you're right. Two of the people in our office were eating kava. I've already mentioned them so mmany times today, I'm getting tired of it. It looks so good. It's a new kava. What is it doing? What's a new kava? They got something in it. I don't know, new kava. I like kava very. Oh no, I know what it is. They get an A. They changed. They had a C, and now they're an A. Yes, kava. And that, ladies and gentlemen, the conclusion of the lightning round.
The Lightning Round is sponsored by Charles Schwab. Starbucks shares have given investors a fright. Cramer sharing if the toil and trouble is behind the coffee chain. Next.
Why am I so confident that Brian Niccol, the new CEO of Starbucks, can turn around this once great coffee shop? Because he gets it. That's why. As he said on the call last night, I'm going to quote here, "We have to make it easier for our customers to get a cup of coffee," end quote. And with that simple declarative statement, Niccol has started the process of fixing Starbucks, which he admits had a, quote, very disappointing, end quote, quarter. Oh, geez, it's so refreshing to hear the truth. Starbucks is really run down, man. It's turned off its customers. Yogi Berra situation. Nobody goes there anymore. It's too crowded. But it's not broken. Starbucks can be brought back to life if it returns to its roots. The roots that made it very easy to get a real good cup of coffee. It's rare that you see something like this in corporate America. A big brand falls on hard times, and the board has the perspicacity to pick the one guy on earth who can fix it. Niccol. Niccol, in his first regular conference call, revealed himself to be the same quick study that he was at Chipotle, another brand that needed to be resuscitated thanks to mismanagement. Last night, he put on what I can only describe as a clinic that can be used by any manager, any CEO, in any industry, anywhere, to change the culture and resurrect a business that could shrink into oblivion, just drift, if left to its own devices. What's his plan? All right, first, Niccol's setting a goal of delivering every cup in 4 minutes. Something he said was doable because before mobile and myriad offerings, it only took 2.5 minutes to get a cup of coffee at Starbucks. Frankly, I was kind of shocked that the company before him had no metrics, no aspirational goals, no plan in place to even figure out how it was doing in the most important issue facing any quick service establishment these days, throughput. Almost every time Brian came on Mad Buddy when he was at Chipotle, he discussed throughput because wait times need to be cut relentlessly if you want your customers to keep coming back. I often joke that throughput's Brian's middle name. Second, he's freezing prices across the board and even reducing prices for non-dairy drinks. You know, the milks. I no longer get hit by an upcharge. The so-called vegan tax is gone. Good riddance.
House of pleasure.
Third, he's bringing back the condiments bar, which disappeared during COVID. I say bring on the cinnamon. Things will be faster and tastier, too, because we're going to make up our minds how much to put in. Fourth, previous management loved the complexity of the menu to the point where they kept doubling down on it. But Brian knows complexity is the enemy of fast throughput. There was a seminal moment in the call where Brian says, I love this, quote, "Right now, everything has kind of a different price, and whether it's 1 pump, 4 pumps, frankly, I'm still wrapping my head around how the whole system works, and that's part of the reason why I know we have to simplify it." Oh, it's so good to have reasoning, isn't it? Great point. Fifth, he wants to make sitting at Starbucks fun again, even introducing ceramic mugs for those who stay. In recent years, I always try to get out of my old Starbucks as fast as possible. 2 grand, 2:30. Too many people waiting around for mobile orders. The old Starbucks was a great place to spend time, but the current Starbucks, it's soul destroying. Niccol knows what needs to be done because he has an intuitive understanding of the industry. He's the quickest of studies, which is why he recognized that he has to undo so many of the shockingly bad decisions made by his predecessors. This morning, on Squawk on the Street, Scott Wapner asked me if Brian Niccol is up to the task. I said, heck yeah. Brian Niccol, he was born for the task. I like to say there's always a bull market somewhere. I promise I'm just for you right here, Mad Money. I'm Jim Cramer. See you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.